When you want to make money by trading in share market, you should do fundamental analysis before buying. But only fundamental analysis is not sufficient. By using fundamental analysis, you can find which stock is best to buy. But at what time you should buy and sell it, that is also equally important. So let's see this from example. You can take any example. This Tech Mahindra stock, if you buy at this point, then more than 3 times profit you may get if you sell it at this point. But how you will come to know that? So suppose if you buy the share at this peak value, then you may get the losses. So buying a right share at right time is very important, because all the shares are good. That's why they are listed in Nifty 50. But the perfect entry and exit makes a trader successful. And that you can achieve by getting accuracy in technical analysis. So what is this technical analysis? Technical analysis means you should able to read this candlestick pattern. You should able to use the indicators which represent the performance of stock and find the best opportunity to buy and sell. So hello everyone, this is Professor Varsha Jadhav, and in this today's video I am going to elaborate candlestick pattern which was invented by Japanese man Homa in 100 years ago. So this candlestick pattern is generally divided into three types: continuation pattern, bullish reversal pattern, and bearish reversal pattern. So in this today's video, we are going to focus on this bullish reversal pattern. The bearish reversal and continuation pattern will cover in next video, otherwise it will be too lengthy. So what is bullish reversal pattern? Means the whole downtrend is going on, and at the bottom you are getting some sign of candle which shows that the trend is going to reverse. So if you are in selling position, then you have to book the profit if you see this sign, or you can start buying after seeing this sign. So this bullish reversal pattern contributes with this type of candles. This is made up of single candle. This pattern makes by using two candles, and this pattern makes by using three candles. This is hammer, white Marubozu and inverted hammer. Next, piercing pattern, bullish engulfing, bullish harami, tweezer bottom. This is made up by using two candles. Morning star, three white soldiers, three inside up, three outside up. This is made by using three candles. So let's see all these three in detail. But before moving to candlestick pattern, first understand what is this candle, how it is featured. What is the specification of candle? So this is the candle which you have just seen in this example. In this example, all the candles are not same. Some are green, some are red, some are having big size, some are having the small size. So let's see the specification of the candle. So this candle is generally featured by three types. First, its body. This whole part is called as body. Second is featured by weak. Weak means this length which is having above and below of the candle. And the color of the candle. If the color of the candle is green, then it is bullish candle. If the color of the candle is red, then it is bearish candle. Bullish candle means strength in the market. You can buy. And red candle means selling pressure in the market. You can sell. So how this candle form? When suppose the share price is open at this price and the price is going to increase, right? So suppose this is the day candle, the share is open at this price, and in between it attains this low, and then it reaches the maximum value, its high value, and it closes at this price, right? So let's we'll have more elaboration by taking the example. The share is open at 100. So in between, suppose this is the day candle, then throughout day, if it open as 100, then suppose it having low 50, and it attains the maximum high 200, and it closes at 150, right? So this is going to be the bullish candle. Then what about the red candle, selling candle? So selling candle open at here because selling pressure. The suppose share is open at 200 at this price, and in throughout day it reaches its high, that is 250, but again it reaches its low 50, and in between at the end of the day it closes at 150. So this gives the formation of this green candle and red candle, or bullish or the selling candle. So let's see in detail this candlestick pattern. First one, hammer. Hammer means, again this is the bullish reversal pattern, means whole downtrend is going on, and at the end you are, or at the bottom you are going to get some sign. So if you see this sign, you have to book your profit if you are in the selling position, or if you get this sign you can start buying. That is bullish reversal pattern. So at the bottom, let's see how many signs you have to look out. So first one is hammer. So this hammer looks like this is the real body, and the hammer is having the long shadow, which is more than 22 times of the real body, right? So in this diagram also you can see all the candles are not same. So each candle is having its own specification, so that we are going to cover now. So this is real body and this is wick, which is this wick is generally 2 times more than the real body. So next is, so if you see the sign you can start buying by keeping the stop loss at this low. So you can start buying by keeping the stop loss at this low. So next one is white Marubozu candle, or white Marubozu pattern. Marubozu is again the Japanese name, which means the strength in the market. Strength means, that's why this candle is not having weak, because suppose the share price is open at this value and it attains high and it closes its high value only. It does not go high and again go down. It shows the strength in the market, right? So that's why it's called as white Marubozu candle. So when the downtrend is going on, and if you see this see this Marubozu candle, the strength in the market, then you should you can book the profit, or you can start buying if you see this pattern at the bottom. By keeping the stop loss of the bottom you can start buying. Why they had specified white? Because when it has been invented, the candles are having white and black color. So white is for again buying and black is for selling. So that's why white Marubozu. Now everything is in color. So green and red we used to follow. So the next pattern is inverted hammer. So when the downtrend is going on and you can see this inverted hammer, you can start selling or you can start buying. So this inverted hammer is exactly inverse of the hammer. Again long wick, the real body is at the bottom. So wick is generally 2 times more than the real body. And if you get this sign, you can start buying by keeping the stop loss at the bottom of this candle. The next is piercing pattern. So in piercing pattern, when the downtrend is going on, you are having red candle, but which is followed by the green candle, and this green candle is open at the bottom of the red candle. This green candle is open more at the bottom of the red candle but closes 50% more of the red candle. So that is formed by the piercing patterns. This is multi candlestick pattern which is formed by the two candles. So when at the bottom you can see this type of formation of candle, then you can start buying by keeping the stop loss at the bottom, right? Next is bullish engulfing. Bullish engulfing means in the downtrend you are having red candle, but after red candle you are having next candle is green. But what is the specification of this green candle? This green candle open at the low of the previous candle, but it closes above of this red candle. that is called as engulfing. Means this green candle totally covers this red candle. So when you are seeing at the bottom this type of pattern is formed, this is multi candlestick pattern formed by two candles. So when at the bottom you can see this type of pattern is formed, then again you can start the buying position. The next is bullish harami. So what it mean, when you are having downtrend, you are again having the red candle, but after the red candle you are having one small bullish candle. So if you see this pattern, again you can start buying by keeping the stop loss at the bottom. Next, after bullish harami, we are having tweezer bottom. In tweezer bottom, again downtrend, we are having this red candle. After red candle, we are having this green candle. But the specification of tweezer bottom is the bottom of the both of these candle, red and green are same. What it means? It means the support in the market. The price is not going below than this. Means buyers are coming in picture. Buyers are trying to pull the market above. Right. So when you see at the bottom, this type of pattern is formed. This is multi candlestick bottom pattern formed by the two candles. When at the bottom you can see this type of pattern is formed. So you can start buying by keeping the stop loss of this bottom. Next is morning star pattern. So in downtrend, when you are having red candle is followed by the doji type of candle. Doji type of candle means small body and both side long wick. And after doji indicates the indecision in the market. Means market cannot decide whether to go down or whether to go up. So after doji, you are having big bullish candle. So this pattern is called as morning star pattern, which is formed by, this is multi candlestick pattern formed by the three candles. So in the downtrend bottom, if you get this type of sign or this type of pattern is formed, then you can start buying by keeping the stop loss at this bottom. So the next one is three white soldiers. Three white soldiers means at the bottom of the downtrend, you are having big bullish candle with no wick or very less wick. Again the second candle which opens quite below of the previous candle but closes above its high value. Again the next candle is open quite below of the previous candle and closes above its high value. So this type of pattern, this is multi candlestick pattern formed by three candles. So this type of pattern called as the three white soldiers. So if you see this pattern at the bottom, you can go for the buy. The next is three inside up. This three inside up is again the multi candlestick pattern formed by the three candles. So this is quite extension of the bullish harami. So what was the bullish harami? You are having red candle. After the red candle, you are having small bullish candle. So this bullish harami pattern is confirmed by this big red candle, sorry, big green candle. So when this pattern is confirmed at the bottom, you can go for buying by keeping the stop loss at the bottom of this green candle. Next is three outside up. Three outside up is the extension for this bullish engulfing pattern. Bullish engulfing was red candle followed with the next green candle which was totally covered by the red candle. So at the bottom, if you find this type of sign, when the extension, why we are saying extension, because after this we are getting one green candle, right? So this green candle gives the confirmation of this bullish engulfing pattern. So when you are getting the sign at the bottom, you can go for the buying. This is again multi candlestick pattern formed by the three candles. So in this video we have covered this bullish reversal pattern. The remaining bearish reversal and continuation pattern will cover in the our upcoming video. So if you like this channel, click on like, share and please subscribe this channel. Thank you.